Okie dokie, good day everybody. This is James of MarketsAware bringing you your daily insight. Today's date is 27th of July 2016. Brought to you, as I said, with love and care from MarketsAware. Today we're going to have a quick look at the dollar, Japanese yen, and really we're going all over to say it's over to you, land of the rising sun. So looking ahead at some major events coming up which can indeed affect this currency pair, the dollar versus the yen. Now, as you know, previously I did speak about the upcoming events which are actually happening today at 6 p.m. GMT. That is, of course, the US Fed monetary statement and the US Fed base rate decision, both at 6 p.m. GMT today. And as I mentioned, though they're extremely high importance, and we're looking at the dollar yen today, expectation is going to be nothing happening on the rate decision, but there people will be looking at hints that they might do a further rate hike in the future. Okay, I can't spell hints, but never mind, you get what I'm trying to say. But after that event, we then move on to what happens on Friday, the 29th of July, and this is bringing in a very big news. And so we're keeping an eye on that. So, of course, the Bank of Japan's base rate decision. This is happening at 12 a.m. GMT. Now, as it stands, the base rate decision in Japan is minus 0.1%, but expectation is they might increase it or lower this, should I say, to minus 0.2%. This is extremely high importance, of course, but also happening on that day with no set time is the Bank of Japan's monetary policy statement. And expectations is they are to actually inject more steroids. What I mean by that, of course, is a little joke, but more stimulus into their economy, which, of course, we'll talk a little bit about that on my next slide. So let's have a look on more detail on what is actually occurring. Okay, so after Janet has her go tonight, it goes over to the Bank of Japan and they take center stage. Now, BOJ is expected to lower interest rates, like I said, by another minus 0.1% to minus 0.2% to try and kickstart the Japanese economy. As well as that, there is a lot of noise and a lot of rumors that they will inject further stimulus. I say, of course, I joke with steroids, but more stimulus into the economy in a form of a cash injection of 27 trillion yen and a release of a 50-year government bonds. Now, this is only a rumor, and we'll talk a little bit about what this rumor has done so far to the actual dollar yen. But like I say, this is sort of really what the market is now beginning to expect. But if, of course, that doesn't happen, and they maybe only inject 20 trillion yen, only 20 trillion yen. But if they inject 20 trillion yen, the market may see a little bit disappointed in this action. So we need to watch this developments very, very closely. So let's have a little chat about what's going on in the market currently. Now, we had very early morning madness today. Basically, this is the dollar yen on a 1 hour chart. What happened, like I've already mentioned, there was rumors leaked onto the market of this supposed stimulus package, this 27 trillion yen injection, and the release of 50-year government bonds. Okay. So what we actually saw with that was a huge spike in the dollar yen, rising all the way to 106.50, but later it crashed as the Bank of Japan rushed around trying to put these rumors to bed and deny it. So we saw a lot of activity, a lot of early madness in the dollar yen. If we look actually to the build-up now of the Fed and the Bank of Japan announcement on Friday, this is on a 4 hour chart, you can see there is a couple of levels and sort of room for maybe some short-term noise and short-term movements here. According to our good old friend Bollinger, on a 4 hour chart, the current key resistance after obviously the high of the session at 106.50 is 106.936. The pivot, in this case acting as a 4 hour support on the Bollinger, is 105.55. Breakthrough from that, the second support, like I say, if we get disappointment today in the Fed or disappointment with maybe a BOJ, this is a second 4 hour support, 4 hour chart support we need to look at, which is 104.167. So like I say, there is a little bit of room maybe for some short-term noise and short-term movements on there. If we then have a look at the bigger picture, this is a long-term trend, this is on a daily, of course, we can actually see the real key level really stands at 105.70. That's actually the standard moving average. And as you can see, anything below that is considered slightly negative. Okay, so this is a major, really major resistance. Not saying that it's a short-term resistance, it's a daily resistance. We still have, like I say, if you look at a 4 hour, plenty of room for a breakout on the upper side and on the downside. But we need also keep an eye on the main sort of support level here, according to Bollinger on the daily, which is, of course, 103.98. So really, like I say, these are quite key levels to keep an eye on the daily chart there. But like I always say, that is a wrap for now. This is not in any way to be taken as advice. It's purely for informational purposes only. Special thanks again to Natalia. We do love you. This is James from Markets Aware. You trade safe.